This is some of the quotes from our customers, and this is what our customers saying, using crypto-based blockchain solutions for cross-border payments with Ripple. Being part of Ripplenet has helped us to completely enhance our customer experience and expand our business. Through NIM's use of Ripple in the Philippines and Mexico corridors, we are able to eliminate pre-funding requirements and offer faster remittances at lower cost. After joining Ripplenet, we became a credible partner of financial institutions all over the world, and this helped us cut transfer costs by as much as 40% and settle cross-border payments in just a few hours. So, is crypto really dead? Well, we certainly don't think so at Ripple. We've been around for 10 years, and from the beginning, we've been focused on solving real-world problems around cross-border payments with crypto and blockchain. And what we have created is a thriving payments network with hundreds of customers using this today, over 6 continents, over $15 billion flowing through it on an annual basis. Every single day, we hear the CEOs, CFOs, heads of treasuries, payments of our business customers telling us how they're able to grow their businesses faster because they no longer need to park capital in destination accounts, and how they're able to compete better because of the cost savings and better customer experience they can deliver to their end users, be it people or businesses. Over the last 10 years, what we have observed in terms of the crypto space and the blockchain applications in financial services, that we've moved from hypotheses to pilots and now to real world use cases, proven use cases. There's real utility and use cases being built in this space. And this is what I would like to talk to you about today. So let's talk about the crypto winter. It looks very cold there, obviously. Look, let's face it, right? It has been a very challenging macro environment, and crypto and digital assets have not been immune from it. Yet we still see an increased adoption of digital assets. If you look kind of through the doomsday news, we still see a lot of crypto-native companies continuing to build. Ripple is one example. We've never been distracted by the movement of pricing of digital assets. We're very much focused on, we actually found these times sometimes even better to refocus the business, continue to build for the future, get great talent. And we're not alone. There are some other names out there like that, FTX, Binance, Circle, Bitstamp. If you dare to look sort of through the news, we see a lot of these as well. But what is also interesting is we've seen a lot of established traditional financial institutions jumping on this bandwagon, and they have not been deterred in this environment either. Some of the relatively recent sort of developments to highlight is some of the big Wall Street names have recently announced they're launching a new digital assets exchange, for example. JP Morgan, Goldman are already experimenting and trading on blockchain. SME Group launched Ethereum options. BlackRock has recently partnered with Coinbase to bring digital assets to their institutional customers. And the list keeps going on and on every single day. Now, with global adoption, the total market cap of digital assets have also been increasing. Now, what happens is, a lot of, let's say, crypto naysayers love to talk about how the digital assets, digital market cap of digital assets were, at a peak of $3 trillion last November. Now you look at it as circa $1 trillion. It's a big slump. And I cannot, argue against that. It is a big slump. But look at the historical trajectory. Look, it's still a big upward trend. In 2013, the market cap reached $10 billion, digital assets market cap reached $10 billion. It only took 5 years, in the following 5 years, to 10x that number, $100 billion in 2017. And in the last couple of years, it's been fluctuating between $1 to $3 trillion. A lot of new use cases around lending, NFTs, identity, various others beyond payments are coming up continuously. What we have also done is we have done our own research, spoken to financial institutions and consumers, developers. Actually, this is from over 1,600 financial leaders of financial institutions and hundreds of customers and developers. And we still see the same traction. 8 out of 10 global institutions expect to use crypto within the next 3 years. So if you are not looking, your competition certainly is. Payments is a very strong use case. 70% thought there's a really interested in using blockchain for payments. And interestingly, if you look at the consumers, 56% of global consumers surveyed said they're actually more likely to trade with a merchant that accepts crypto than not. And so we see this great adoption, but I want to kind of, make it very clear that we don't believe this great, increased adoption of digital assets and crypto is not a death siren for fiat either. This is not a fight. This is not meant to be one versus the another. They can really complement each other. And I think what we've done at Ripple is a really great example of that. We have leveraged the digital assets, XRP, as a bridge currency between two fiat currencies and to create efficiencies and new value by moving it across the world. Another good example is our work in the central bank digital currency space. We have created a private version of the public XRP ledger, and we're working very actively with central banks around the world to bring central bank digital currencies to their countries along with fiat currencies. We certainly believe in a multi-chain, multi-currency future where interoperability is increasingly important, interesting, and digital assets can play a really big role in that space. So $10 trillion. $10 trillion, big number. This is the amount of trapped capital today around the world, waiting in destination markets, many currencies, accounts, countries, waiting for the moment they're going to be needed because somebody needs to make a payment on the other side of the world. It's a big number. And the reason is the current financial infrastructure was created before the internet was built. It's not really fit for the way we live, trade, socialize, entertain, etc. today, which is global, on demand at a very, very fast pace and 24/7 as well. But what could you do if you could free up this $10 trillion? Let me tell you what some of our customers do. Expand into new markets, invest in customer acquisition, retention, marketing campaigns, technology, customer experience, and the list goes on. And this is only really one of the benefits that blockchain is and crypto liquidity is solving today in cross-border payments. Let me talk about a few more. So let me make it very tangible and practical for you, and I will talk about 3 specific use cases and examples where this is playing out today. One is, so imagine you are a Thai worker in Sweden. You want to send a portion of your salary back home to Thailand to cover for rent and medical expenses, what have you, groceries. Now you can use your traditional method, you go to a traditional bank account, etc. If you're able to do so. Not many people, there's 2 billion people in the world that don't have access to that. But let's assume you can. It will still take probably about 3 to 5 days, most likely, for your family to receive the money. Won't know exactly when that's going to arrive. You're very likely to pay about €7 out of each €100 you're trying to send. And as an alternative, you could go to somebody like XBAT here, which is a Ripplenet customer who partners with Ripplenet and our partner in Asia, Tranglo. And you can actually send the money instantaneously at a fraction of the cost any day of the year, even on Christmas Day. And what's really interesting is to enable that, XBAT does not need to park any Thai baht in Thailand. Instead, they can take that capital and invest in their growth. And if they choose to grow in open up another 20 corridors, 25 corridors, they can still do so with the same single API connection they're connected with through Ripplenet already. Example number 2. Now you are a small furniture manufacturer in Australia. You import raw materials for your terrace tables from Singapore, let's say, and you want to pay your supplier in Singapore on time because you want to build a trusted, reliable relationship for the long term, but you don't want to pay too quickly. Your working capital, right? You have other expenses rent, and we want to pay salaries and other supplies, and so on and so forth. Now, it's the same challenges, right? With your tradition as a very small, furniture manufacturer, you're doing it through your bank account. This probably cost you an arm and a leg, take you a few days, and will be very challenging to establish that relationship. If you work with somebody like OmiPay in that market, you can address a lot of these challenges in a similar fashion as I explained in the previous example. Essentially, by using XRP as a digital asset, as a bridge currency to move money across, you can access the currency you need, when you need it, where you need it. Now I'll come to the last and the third example. Now you're head of treasury at People. People is a blockchain native financial services company with a global footprint. Now you have a really tough job. You're trying to make sure that you have the right funds in the right currency in the right countries around the world. There's a lot of complexities, right? There's a lot of forecasts, assumptions that are changing, and operational burden. What if you could manage your treasury operations globally across the world in real time at the touch of a button? Our on-demand liquidity solution for treasury enables you to do that today. So to summarize, there are three clear benefits that we see today that we're delivering today to our customers with crypto and blockchain for cross-border payments. Number one, improved cost of capital. You no longer need to park funds in destination accounts, whether you're handling payments for your customers, people, businesses, or for your own treasury payments. Number two, you can now pay on Christmas Day, 24/7, 365 days a year, instant settlement. And as the on-and-off ramps between crypto and fiat are improving as well, this is getting better every day. Thirdly, global liquidity from day one. Again, globally, over the last 2 years, we've seen increasingly exponential growth in digital asset pools across the world, which creates a bigger opportunity to access, again, the right asset at the right time where you need it. Now, in closing, sometimes when I explain all of this in some of these events, people ask me, oh, this sounds amazing. Can I try it? Is there a pilot, a proof of concept? Well, the good news is this is beyond pilot. This is real and happening today. With blockchain-based, our crypto-powered cross-border payment solution essentially has been around for the last few years now, and it's going from strength to strength with more customers and partners adding onto the network. And this is happening despite any price fluctuations, market turmoil, etc., because since the beginning, we're focused on solving the real-world problems of moving money and essentially more broadly value across the world. So this is real, it's happening, it's here and now. And as we speak and have this conversation today, hundreds of customers are already benefiting. And, we partner from the beginning. Again, we've been partnering with a lot of financial institutions, very much like yours, and the experience and expertise we have developed over the last, 10 years, building the largest crypto-powered cross-border payments network with some of the leading institutions around the world. We're very excited to bring that and expand that ecosystem. Now, if you're wondering how you can move money abroad cheaper, quicker, and without parking funds anywhere in the world, I definitely invite you to explore what digital assets and blockchain can do for you. Any questions, please find me on email, LinkedIn, or after the event, or feel free to ask questions in the Q&A session. Thank you very much.